Hi there, welcome to Kneppy Invests, the all-important monthly update of the performance of three portfolios, including the group portfolio that the viewers of this channel helped develop. So I did ask you to choose some companies you thought will outperform the market over the next 5 to 10 years. So we'll be able to see the performance of that group portfolio and two of my own personal portfolios, one that uses a strategy, just a long-term buy and hold strategy, and the other one uses a momentum sentiment short-term strategy. So we're able to see how these three portfolios performed versus the market. Hopefully we have beaten the market in the performance, because otherwise, why would you have the stress, even though I don't find it stressful, I find it fun, to pick and choose companies to buy when you could just buy an ETF and not have that stress and fun of looking at the performance of those companies you have chosen yourself. So hopefully we have significantly outperformed the market. My ultimate goal is to double the market return. So we'll see how we're going. But before we get to the performance of these three portfolios, I'm going to give you a bit of an update on what I'm doing, some of my plans, give you an update on my mission of which I started about 1 month ago, and see how that's going. And then I'll just tell you about some of my plans in regards to videos I'm thinking of doing in the future, and some other plans outside of YouTube videos. So I hope you do give me some feedback in regards to these plans. So let's get into it and talk about my mission that I started about a month ago. My mission was to create a video on every single company that achieves a positive operational cash flow June quarter this year. At the point in time when I developed this mission, I didn't really realize, or maybe understand, the amount of companies on the ASX that aren't operational cash flow positive on a quarterly basis. I knew there was going to be a lot of companies, small cap companies, when they release their half yearly or yearly results in August, that would be operational cash flow positive or profitable. I just not realize there were a lot of companies that release Appendix 4Cs that are operational cash flow positive. In fact, there are 102 more companies I have to do a video on. Now, if I do 2 videos a day, that's 51 days, or nearly 2 months of videos. That's just doing 2 videos a day and no videos on anything else. So more than likely to succeed in my mission and fulfill it, because when I set up a mission, I want to fulfill that mission. I want to succeed. I don't like failure when it comes to these sort of things. So I am going to succeed in this mission. And to succeed, in my opinion, I'm going to have to think of good ways to get through all these companies, but make it a little bit shorter. So I think what I'm going to do is, in some videos, particularly those companies I really don't want to do a video on, I'll just put them all into the one video or a few videos so I can get through all 102 companies that I have left to do. Some of the things I have discovered as I've gone through this process is just the amount of companies that are operational cash flow positive. I was shocked to discover there's about 120 for the quarter. And this does not include those companies that will be reporting for their full year and half year results in August. So there's going to be quite a few companies there as well. But the main thing that I took away from the June quarter reporting season is the amount of really crappy, small, micro mining companies on the ASX. There is a plethora. Our exchange is littered with these small cap mining companies that are, not producing, and they're always needing more capital to dig in the ground, to explore, and that sort of thing. I was shocked just how many there are. And now I understand why about 10 years ago I decided to just ignore the Appendix 5Bs of the mining companies, because the vast majority of them, I'm going to say 95 to maybe 97% of Appendix 5Bs, there is not one single dime of cash flow in these companies. And I'm talking about in production, that sort of cash flow. So that's one thing I really took away from the June quarter. And in the future, I don't want to say I'm going to neglect the Appendix 5Bs, because there are some producing mining companies out there that are issuing Appendix 5Bs. And I don't want to neglect those companies, because I do think there is opportunity out there in those sort of mining companies. But unfortunately, the vast majority of mining companies are not producing. They're just exploring and spending all their shareholders' money. These are some of my plans and ideas for Kneppy Invests and even Kneppy Invests outside of YouTube. Some of the video ideas I do have, I really want to continue on this small cap profitable operational cash flow positive theme. And this is going through full year and half year results. For instance, Corvest, I've already done a video on this company after their half year results, which would have been released towards the end of January. They released their full year results. That is a profitable small cap company, been on the ASX for over 50 years. They are growing very slowly, but they were quite profitable for the full year, and the share price has taken off. I do think there is a bit of risk there because this company has experienced quite a bit of tailwinds behind it. I don't want to do more companies on stocks I am looking at to buy. Also, I haven't done a video on hot or breakout stocks in a while, so I want to continue that video series down the line. Also, want to do a video where it's not particularly a live stream, but sort of focused on what I do before trading opens every single day. So I do have habits I stick to every day, and I would like to show you what I do because I think there is a potential if you can take something away from what I do that could help you on your own investing journey. That's my hope with doing that sort of video. I've also been thinking about setting up a Facebook page. So I am in Facebook, personal Facebook, and that is something I have been thinking about recently. So if you do have any feedback about any of these next three ideas, I'd love to see your feedback. So think about starting a Facebook page, podcasts, so turning my videos into podcasts. So podcasts would be separate from my videos. I'll just be turning those podcasts or those videos into podcasts. What I find myself is I listen to podcasts way more than watch videos, particularly because I'm outside quite a bit, particularly running in the morning or jogging. I spend between 2 and 3 hours each morning outside running, and that's when I listen to a lot of podcasts. Another thing I'm thinking of doing is setting up something very similar to Patreon. And Patreon, if you don't know what it is, it's artists who set up a subscription-based platform that you can sign up to, different levels of subscriptions. And the logic behind that is I can focus on that, and anyone who does subscribe to myself, I can spend more time on their questions, that sort of thing. And at the moment, I have 2,500, or nearly 2,500 subscribers on YouTube, and I would think that maybe 1% of my subscribers would join up to my Patreon channel, and that would mean 25 subscribers. And in my opinion, that might be enough that you can get, if you do sign up, you can get some good feedback from me, particularly if you're able to ask questions. I don't know if you are on Patreon. That's something I'm going to have to research in the future. So if you do know anything about Patreon, if you do think that's a good platform for me to build upon Kneppy Invest, just give me some feedback because that's something that has been festering in my mind for the last few weeks. Now onto the performance of the group portfolio and my own two personal portfolios. Before we get there, I just want to look at the performance of the XJO, which is the ASX 200 stocks. And this is the chart going back to just prior to the COVID-19 financial panic. And just prior to then, the XJO was just getting up towards 7,200 and then fell all the way down to 4,400. Now, I haven't really talked about what my own investing plans were during that period. I sold out most of my companies during January and February of 2020 because the market was getting a little bit too hot and I wanted to pay down my mortgage because I worked out the expected returns over the next 5 to 10 years, and it was fairly small, those expected returns. So I decided to just pay off my mortgage and then put all my money I get from where I was working into investing and then build up my wealth that way. I did not realize that there was going to be a major crash within the next few months. After that, I was almost completely out of the market at one point, and I was thinking, because I had put all my money into my mortgage, I had in my redraw facility something like $180,000 there, which I still have not touched. But I started investing around April the 1st, so 1 week after the bottom. That's when I decided to start putting money back into the market. My major goal, and this is something I have learned, is if the market got down to 4,000, that's when I was going to go all in and put all my $180,000 in. If it got down to that level, I don't think, in hindsight, having a target for the market and going all in when it reaches that target was a wise thing to do, because it didn't quite get there. It got to 4,400. That's one thing I have learned. Don't have targets for the overall market. I think a good strategy I could have employed was to start going in the further the market went down. And then when it started rising, put a little bit more in. So sort of average your way in, not to go all in when it reaches a target. And so I have not taken any money out of my redraw facility, but yet still I've grown my wealth using this strategy from $0 to currently over 150,000. So it's worked out fairly well, but I think I could have really supercharged my returns by averaging down as the market fell off, particularly when we saw that volume really increase towards March 23rd. That was a good sign in hindsight that we're seeing a potential bottom in the market. And really since then, the XJR has just been in a really nice, well-defined uptrend. We've got three moving averages here: the 50-day moving average, 20-day, and 10-day. And the XJR has been above the 50-day moving average ever since November last year. So that's 9 months at this point in time. And every single time the XJR gets towards the 50-day moving average there, and there. Just recently, it bounces off that. So that 50-day moving average is a nice support level for the XJO right now. And currently the XJO is above where we were pre-COVID-19, which is amazing, particularly when I do think the Australian economy will go backwards for the September quarter. More than likely, we won't go into a recession unless the lockdown continues in Sydney and we get further lockdowns in Melbourne, Brisbane, Adelaide. There is potential we could have another recession, which would be amazing to have two recessions in 2 years when we didn't have a recession for 30 years. There is something I want to clarify now. I just remembered that even though I was talking about I went to almost complete cash in early of 2020, that's not completely true, because I'm not talking about my super fund. So I do have an active super fund with net wealth. That means I can actively trade, buy and sell companies within the ASX, complete ASX, including small cap companies. So some active super funds, you're only allowed to buy and sell ASX 300 companies. With net wealth, I think it's called Super Accelerator. So it's not a self-managed super fund, but it's a more active super fund. And I am able to actively trade within that. But my own personal strategy for my super fund is to do as little trading as possible within that fund. So during the COVID-19 financial panic, I did maintain a significant holdings within that super fund. I think I was only about 30 to 40% cash at the height of the COVID-19 financial panic. So a lot of my long-term buy and hold companies are in the super fund, and I did not sell out of those companies during the COVID-19 financial panic. So I just want to make that clear that I didn't go completely to cash. That was only my personal investments that are outside my super funds. Now to what you've been waiting for, and that is the performance of the group portfolio. For those who don't know, what I did with this group portfolio is I asked the viewers of this channel to pick 3 companies they think will outperform the market in the next 5 to 10 years. I collated the results of all those viewers who chose 3 companies, and I came up with the 25 most favored companies by the viewers of this channel. And these are the 25 companies, and I've ranked them based off their percentage return over the past month. So best at the top, worst at the bottom. And the best performing company since the start of the financial year is Arctis9, AR9, up 48.9%. They did release their Appendix 4C on the 27th of July, so I will be doing a video on this company within the next week. I think it's about number 12 on my to-do list. The next best performing company was Lake Resources. I didn't know much about this company. They're up 38.8%. Before it was chosen by the viewers. And as soon as I did a little bit of research on this company, I went, oh, this sounds like a very interesting company. Third on the list was Tesseract. This is a company I now own and have in my short-term momentum and sentiment portfolio. They also released their Appendix 4C. It was either on the Friday or Thursday. And it was absolutely stellar results, amazing results. And Tezzeret is up 27.7% for the month. Next best performer was Novonix, up 16.2%. And Ares Resources was in number 5 at 12.8%. Probably the biggest companies were next on the list. ResMed, BlueScope Steel, and BHP all grew more than 10% during the month. And then Fortescue Metal just behind them. Worst performing company was IBX and CI1. These are probably two of the companies I know the least about within this list. And those two companies, I did have to write them down. IBX is Imagine Biosystems and CI1 is Credit Intelligence. Both of those companies are down, particularly Imagine Biosystems is down 27%, Credit Intelligence down 18.8%. And then the third worst performing company was Pointera, down 13%, Zip down 12.2%, and Kogan down 10.3%. And then sixth worst performing company was Megaport, which is a company I am interested in. So this is just a performance over 1 month period. Sometimes you might see a bit of mean reversion in the next month, and some of the best performing companies will be the worst performing companies, and vice versa. It'll be interesting to see what happens in August and see if that does happen. Or maybe those companies that are performing well, like Arctis 9 and Tezzeret, because they released really good quarterly results, maybe their performance can continue in the next few months. Wait and see. So wait for another month and we'll see the results in August. Now onto the performance of my two own personal portfolios. First one is the personal short-term sentiment. Now this really outperformed the market from August last year to the end of financial year. And so I just wanted to compare the performance of this portfolio to my long-term buy and hold strategy, which I've been using for over 10 years. Now this is a more active portfolio, so we'll actively trade in and out, trade companies in and out of this portfolio. And over the past month, I have, or since last time I did an update, I have disposed of Kogan, Appen, Kathmandu, and A2 Milk. The main reason I sold out of Kathmandu and A2 Milk was simply because of the lockdowns around the country. And Kathmandu have already said they are experiencing some slowdowns in their stores, which is natural enough. Now, I did expect Kogan to get a bit of a lift because of these lockdowns. Exactly what happened last year. And Appen, I've actually moved that company from my short-term sentiment portfolio to my long-term buy and hold portfolio. And I've made one purchase during the last month, and that was Select Harvest, simply because almonds, they're all about almonds. Almonds right now are seeing lower supply, greater demand, and almond prices are starting to increase, and that's good news for Select Harvest. Amount of purchases I made during the month, $4,286. I have $10,580 of cash. If you do look at this portfolio from CommSec, it says the returns or percentage returns is at 3.8%. That's a little bit too high because it doesn't take into account the disposals I made. And in fact, all 4 disposals I made were at a slight or maybe not so slight loss. So the returns for this portfolio are not quite 3.8%. They're something like 1.6%. But we'll look at those returns and compare it to the market later in this video. Onto my other personal portfolio, which uses a long-term buy and hold strategy, which I have been using since I started investing well over 10 years ago. So this is just finding those companies you do believe will be significantly larger in the next 5 to 10 years. You have to use a patient approach to this, so not as active as the short-term portfolio, the sentiment portfolio, so much less active. So in fact, last time I made a purchase was XF1 or XREF on the 9th of July, and more than likely I won't make many trades within this portfolio. And I'm using a portfolio approach, and what that means is I don't expect every single company in this portfolio to succeed to beat the market over the next 5 to 10 years. I'm hoping for a success rate of between 60 and 70%. And those companies that will succeed, I expect significant returns. I expect 5 to 10 baggers in here somewhere. And those companies that don't perform, particularly or potentially one or two companies might go bankrupt, but the maximum I could lose if a company does go bankrupt is 100%. The maximum gains you can make if you buy a company and just hold on to it, just let it run for as long as possible, is infinite. It's not 100%, it's 1,000%, it's 10,000%, it's even 100,000% potential returns if you're willing to buy a company and just hold on to it as long as possible if the company keeps performing. So that's the approach I have in this portfolio. And at this point in time, this portfolio is succeeding pretty well over the past month, up 5.8%, so significantly higher than the market returns. The best performing company was Revisum, up 54%. I think that was lucky because I bought that right at the dip. So right at the bottom of the Revisum's share price isn't moving in an uptrend. It's not going higher. And I think I just bought it at the right time. It was just a timed trade, that was. Next performing company is EnviroSuite. Extremely happy that's performing well. The share price went down from something like 23 cents to 9 cents. It was getting ridiculously valued at those prices, and I'm very happy that the share price is starting to rebound, up 44%. Alexium, a fairly small company. I probably would not recommend Alexium at this point in time, but over the past week, the share price has run up quite a bit. They released their quarterly report on the Friday, and there is some good signs in that quarterly report. That's up 33%. And then MSC Services, which is a security company, really low value, market cap about $10 million, yet it is profitable and it is operational cash flow positive. The only thing against that company is very low margins. And then other companies or really good performing companies, Sequoia Group, AVA Risk Group, very happy that has performed really well as well. Then we get into the worst performing companies, Orbital, which had an update which was a little bit negative, and that's why the share price has actually fallen quite a bit over the last few trading days, and that's down 16%. Point Terra down 13%, Zip down 12%, and Kogan down 10%. So quite a few of those companies that are worst performing, also companies that are held in the group portfolio. So there is a bit of crossover between the group portfolio and this portfolio. Not a lot, but there is a bit. The companies I've included in my two personal portfolios that I've shown in this video are not inclusive of all the companies I actually do own, simply because the amount of companies I have in my long-term buy and hold portfolio, or using that strategy, is well over $100,000. So I did have to leave some of the companies I do own out of that portfolio, and these other companies I did leave out. However, two of these companies I have bought into within the last month. PWR Holdings, or Technologies, which is a company I did a video on. And because I did that video on, I really liked where that company is heading. So I decided to take a position in that company. And another company I bought in at close of trading on the Friday, the 30th of July, was Catapult. And I'll talk about why I bought into that company in the next slide. I also have positions in 3 mining services or infrastructure companies: Dynamic Drill and Blast, Mitchell Services, and Deckmill. I also have positions in Nitro and Hum, which is potentially the only profitable buy now, pay later company. And I've decided to have a long-term buy and hold position in Appendix, simply because the share price right now, I do think there is some good value right now at about $11. So let's talk about why I took a position in Catapult. I have held Catapult quite a few times in the past. And one of the things I'm trying to do is become less active in regards to companies I do think have a long-term future. So I should have held on to Catapult when I first bought them well below $1 quite a few years ago. And even though the share price has been volatile, the share price is still well above where I bought into them. So I think if I just had or left this company in my long-term buy and hold portfolio, I probably would have done fairly well in the long run. And the main reason I decided to buy into Catapult is the other day I was just looking at the chart and realized the share price was getting down to a really solid support level at $1.66. And the reason I say that's a really solid support level is 3 times in the past, since November last year, the share price has got down to those levels and then bounced off it. So it happened in November last year, again in January this year, and March. And then we've seen the share price get up towards $2.30 3 times in the past year as well. And each time it gets to about $2.30, the share price pulls back. And in fact, we've seen the share price go from $2.30 to about $1.66 or $1.69 in the last few months. So I do think this is at a good level to buy, because if the share price falls below $1.66, that'll be automatic sell. I have thought about putting Catapult onto my short-term momentum and sentiment portfolio, because this does look like that sort of trade, but I want to hold Catapult for the long term because I do believe this company has a lot going for it in the future. And here we have the relative performances of the 3 portfolios I've talked about in this video versus the market. And the proxy I've used, or the benchmark I've used, is the STW, which tracks the ASX 200. So even though the STW was up 1.17% versus the XGO was up 1.09%, there'll always be a small differences, but they should be almost the same. And that is versus the group portfolio, which is up 3.24%, which is double the market returns. The worst performing portfolio is the short-term sentiment portfolio, only up 1.61%, but still outperformed the market. And by far the best performing portfolio out of the 3 was my own personal long-term buy and hold portfolio, up 5.79% for the month. Now, just because that was the best performing portfolio in the 1 month period doesn't mean that's going to continue in the future. In fact, in August, that could be the worst performing portfolio out of the 3, and it could even underperform the market. So just don't take 1 month's performance as an indication for future success. It's not necessarily so. This is a long-term project. I want to see the performance of these portfolios over the long term, and 1 month isn't long term, it's only a short-term period. That's it for this video. Hope you've enjoyed it. If you do have any feedback in regards to my ideas around a Facebook page, podcasts, or Patreon, I love to receive your feedback, and you might have other ideas as well, and I'd love to hear those ideas, because I am one person, and if I can collect everyone's ideas and put them together, I think in the end I'll be better off and you'll be better off as well. Have a good weekend. Hope you're not in lockdown, and if you are, stay safe, and until next time, see you later. Bye.